Hello, I'm Bob Vensko, President of Regal Home Lending. Today we are going to discuss what's driving mortgage rates in light of global coronavirus fears. Average mortgage rates edged higher last Friday, defying trends in other markets and baffling the experts. First thing this morning, markets were again in virus-related uproar. This time, the trigger was Saudi Arabia, which is reacting to the failure of oil cartel, OPEC, to reaching a price-setting deal. It's raising production and cutting already falling prices, which has caused mayhem in most markets. Things were so bad on Wall Street that an automated circuit breaker to stop all trading was triggered when the S&P plunged 7% in the first 5 minutes. Now, normally, we could confidently predict that such markets would result in sharply lower mortgage rates today. However, things have changed, and we may as well see that rates are holding steady or even edging higher. So what's really going on? The Mortgage Bankers Association refinance applications during the last week of February were up 224% over the same week a year earlier. And that sort of growth has been going on for a while. The short answer is that many lenders lack the human resources to process all the applications that are continuously coming in at once. And even if a lender does have the proper manpower and infrastructure behind the scenes to process additional applications, they face another major hurdle. The standard mortgage lending model bundles loans up into bond-like financial instruments called mortgage-backed securities. Those mortgage-backed securities are then sold on secondary bond markets soon after the loan closes. However, lenders must have enough cash reserves to get them past the closings. Those limited reserves are stretched thin by the sudden and unexpected high demand until they're able to sell those loans as mortgage-backed securities to recoup their reserves. Lenders must manage the demand for mortgages in order to match the supply or having money for closing. The fastest way to manage an excessive demand for a product is by raising its rates. In the coming days and weeks, volatility in the market will likely be driven by changing news cycles. Here's the good news and the bad news. The good news: the coronavirus will likely continue to suppress the global economy, if you want to consider that good news. Fears of air travel will have an impact on corporate earnings due to the sudden decrease in tourism and business travel. The bad news: although suppressed financial markets would normally indicate mortgage rates are going to continue to fall, those in the market to refinance or purchase a home must strongly consider the limitations of the lenders that we just discussed. So what should you do? We suggest that you lock if you are looking at closing in less than 30 days. At Regal Home Lending, we're looking at a risk assessment here. Do the dangers outweigh the possible risks versus rewards? There may easily be a sharp correction if and when coronavirus risks are perceived to fade or when the markets decide that the worst is over. Thanks for joining me. This has been another market update with Bob Vensko, President of Regal Home Lending.